All right, Drew here again with goldbugtraining.com, where our mantra is a gold bug is always learning. And in this lesson, it is going to be quite lengthy and long, and that is on the physical spot risks or the physical bullion market, whether that's rare pneumatics or the bullion bars or the bullion coins. We're going to go over all the different spot dealers and some of their tactics and try to educate you really on the difference between the collector category and the investment category, and just really show you how the collector category, generally speaking, is for the guys who are taking home delivery unknowingly to them. Now, there's nothing wrong with taking home delivery. I understand there's the aspect of the doom and gloom or the what ifs, but saying that, I think people start out as a collector or the insurance thing, and next thing you know, that spot dealer has worked on them over the years and years, and then they're falling into kind of that investment category, giving up a tremendous amount of their wealth with these really widespread transactions. And another thing I'm running into, and you'll hear me say again later, is people are running into an issue trying to convert back to US dollars. So there's a lot of risk involved in the spot markets, and generally speaking, it's not really regulated that much, and we'll get into that as well. The CFTC is trying to regulate it more and more with things like the 28-day delivery rule, but saying that it's still pretty loosely regulated. So there's a lot of schemes and tactics being deployed against you guys. So this is why this particular video is going to be quite lengthy and could be long for some of you. So hopefully you'll pay attention. So let's go ahead and get into our core lesson. All right, so let's go ahead and get this started. We're going to go over about, I'd say probably about 10 or 11 slides just to show you some of the things I found on the internet. So here we go. Buyer beware. This place has the highest gold, silver, worst customer service reps in the industry. From my 18 years, I have been with multiple affiliations of gold and silver investment groups. However, blank is not one of the companies I have purchased my metals through, nor never will. I call them and get some punk 20 to 30-year-old kid. Now, the interesting thing about the spot industry is they don't have to be registered, or the people they hire giving this advice, they can hire literally anyone off the street because they don't have to be licensed with the CFTC or NFA. And I think that's really important. I wish the government would change their stance on this, but saying that, generally speaking, when you call these spot cash physical bullion dealers, you're going to get someone in their 20s or 30s that's unlicensed, that's never been a futures or commodity broker, and quite often you don't know their track record. And that's the thing with a licensed person, they go through a background check. But in the spot industry, there are no background checks per se, or required background checks per se, for the people that they hire. And in saying that, I know for a fact that when I made the transition from when I worked at a spot dealer to the futures market, there are many guys in the bullion or the spot market that won't make that transition because they do have a criminal track record, so they won't go into the futures market. So again, in the spot market, be careful of the risks of who you're dealing with, and are they licensed professional or not. Here is another one. I do not recommend you ever talk to these thieves. I must have asked blank, the rep on the phone, 6 times what the commission rate was. I'm a sales guy myself, so I know how to deflect a question and know when one is being deflected. Turns out the commission is 23%, which is, again, outrageous why he wasn't being upfront. And this brings up a really interesting point. There is no transparency on the commissions with a lot of these firms or these spot dealers. And I know for a fact, like the nation's largest bullion dealer, Newport, they were never transparent or upfront with the fees that they would be charging. Particularly like if you did a finance transaction, they would never be truthful or upfront about your actual costs for that transaction. And an interesting thing, in the spot market, many bullion dealers don't even publish their buyback policies or their buyback rates. And they do that by design. They don't want to, well, they want you to send their metal in first. And then once they have the metal, they want to basically haggle with you and give you the lowest price possible for the metals at that point in time. So again, the transparency with the spot market with many of these bullion dealers of the spreads or the commission rates just really isn't there, and the general public does fall for it quite a bit. Here's another one. Duped my elderly mother out of her savings by conning her into purchasing silver coins with a huge markup, much higher than the market value for silver. And they use technical jargon, and she has no way of understanding to explain how they were ripping her off. And this is true. There is no regulation in the spot market for, ripping people off. In other words, if maybe a coin is worth only $100, in the spot market, they can turn around and try to sell that for $1,000, and they do prey on the unsophisticated and unknowing. And that's true with the rare pneumatic industry as well. Any of the rare stuff, that's one of their bait and switch tactics, is they'll switch you to the rare stuff with the higher premiums where you really don't know and realize that you're losing a tremendous amount of wealth. And I see this really prevalent in the spot cash market. Here's another one. Capitalize on the inexperienced investor. I did not understand the cost of investment until I transferred my money to gold and IRA. The closing review transaction says that gold would have to appreciate 38%. I mean, could you imagine 38%? That's basically highway robbery right there. And the fact that this is an IRA, could you imagine transferring your IRA to this company and losing 38% of your retirement funds? Now, this is where I really feel the government should be stepping in. No retirement funds deserve to be going into generally speaking, unregulated transaction with prices and commissions this high. And it's prevalent. I mean, I went through all the bullion dealers just in the last week, all the major ones, and their transaction costs are just sky high. Here's another one. Stay away. Account scam. Called this outfit in 2007, and the salesperson tried to take my excitement for silver and convert it into basically a leveraged scam. They use naive investors' greed to take their entire investment capital or savings. And I know this company, and they sell their bullion based on financing. And again, I think just recently the CFTC filed a case against them for fraud. And it turns out 90% of their investors were losing with the financed transaction, okay? And that's where they give you a loan for the transaction. So the bait is bullion coins on the front end at this particular place. And then the switch is into their financing transaction where it's a 90% losing. And they're not upfront. And that's another thing too, is on the financing transaction, they're never upfront of what your actual carrying cost. Now, it's written in the contract that, hey, you need to calculate all these things, but it's kind of like, when you pull out a loan with a house or a car, there's a truth in lending form that shows you the exact cost of that loan. Well, this particular place does not do that. So again, very deceitful. All right, here's another one. The whole basis of this company is to scam every person they come in contact. They scammed me out of $190,000 in 2008, and I became homeless as a result. I could write a 5-page story about, but I'll just say these are trained con artists. And again, they're not licensed. I know where this guy did his transaction in the spot market, and they're not licensed. They're not really regulated, so they'll take the money off of grandma and grandpa's back, or the unknowingly. And that's the thing, if you deal with a licensed person with the NFA or CFTC, there's a KYC rule, know your customer rule, and you couldn't do, or a licensed person with the CFTC or NFA couldn't do the same things that they do in the spot market because of that KYC rule, the know your customer rule. They have to do a financial kind of background check to make sure you understand that it should be risk capital and so on. Here's another one. Will not buy back from you. And I run into this a lot with people out there. And one of the reasons I did goldbugtraining.com is, so let's go and read this real quick. When my mother died a few years ago, she had several hundred ounces of silver rounds. I called Blank, and they absolutely refused to buy them back. I had original sales invoice and so on. I wasn't looking for a refund, on the original price. I just wanted them to buy them back. And this is an interesting thing. A large percentage of the spot bullion dealers, they don't have to buy it back from you, okay? B, they can dictate the prices that they buy it back from you. It's not exchange traded. That's a risk as well. And C, they can just, really hammer you at the end of this transaction. I'm running into this a lot where I've had a couple people, larger sums, and they're like, I'm $250,000, and they won't buy it back from me, and or they're going to buy it back 5% below spot or 3%, and it's still astronomical. And it's sad that people don't realize that when you go into the spot market, the most important part of the transaction, I've got a slide for this later, is the exit. And I'm going to get into that later. But really, who are you going to sell it back to and for how much? And so I'll get into that later, the exit part. All right, so what to do before you invest. Now, I pulled this directly from the CFTC website. You can run a background check on smartcheck.gov, and you can do a NFA background check on people like myself, see how long they've worked in the industry to verify the company as a person and the selling investment are registered. You can learn how the investment makes money and how it can lose money, and verify claims using independent, unbiased sources. Get the opinions of friends and family members and professionals you trust. Now, that's a tricky one. I've seen a lot of people sway other people with the friendship thing into bad investments. So you got to be careful with that third bullet point. You must consider the product meets your financial needs and risk tolerances, and that's a big one. Understand the risk tolerances with precious metals. It is a commodity, and it trades just like the crude oil or natural gas or any of the other commodities, so it can be quite volatile, to say the least, and it's not as safe haven as some people put it out there to be. All right, signs that a sales pitch may be fraudulent. You are promised guaranteed returns. You are called out of the blue and receive an offer via email. You are told only precious metals can hold their value in times of crisis and political upheaval. They use that one a lot in the spot market. You are told that gold or silver, other metals, have potential to reach highest values in a long time. The salesperson claims to be a metals dealer or merchant to sound more legitimate. You're told precious metal transactions are unregulated. Now, I have a little bone of contention with that because generally speaking, they are kind of unregulated. Now, I know the CFTC is coming in to try to regulate them a little bit based on the Dodd-Frank rules, but they're regulated to a point, but then generally speaking, they're relatively unregulated as well. The sales agreement does not say where the physical metals is located. That's another one. A lot of these guys with these storage programs, making sure the metal is actually audited in there. The pitch claims that you make a lot of money with little risk by purchasing through a financing agreement. So again, you can see the CFTC is really starting to go after the financing aspect or the leveraged transactions using loans. Be aware of other types of offers. Now, be cautious of offers to buy bullion or coins to store the metal in secure facilities rather than deliver it to you. If the seller is not registered with the CFTC and the sale involves financing or buying the metals on margin, it could be operating illegally. Now, I will say the CFTC is really going after the off-exchange transactions because it was very prevalent. In most cases, it is against the law for a non-registered entity to sell any commodity over the counter using credit or margin, unless the buyer receives delivery within 28 days of the purchase. Now, the unfortunate thing, that delivery thing, I think is where Congress really messed up with the Dodd-Frank. They just said the word delivery. They didn't say where. If they said home delivery, then it would have eliminated some of the financing transactions or financing firms. So what the largest bullion deal in the country, what they did is, they started delivering it to the vault in their name, but it wasn't really delivery per se. So that is another risk. So let's go ahead. Gold and other precious metals such as silver and platinum may not be as safe as some promoters make them out to be. Claims sometimes suggest that gold or silver are safe havens that can protect you against economic or political uncertainty. While precious metals offers additional diversification to an investment portfolio, they are subject to the same pressures of supply and demand as other commodities. And that couldn't be more true. I think that is one of the unique things about precious metals that people don't realize. You know, the greed and fear factor are used as a selling tactic that, you know, the world is coming to an end, buy metal today, buy metal today, but saying that, you know, it is just another commodity. It is, you know, it's funny, you know, you don't see crude oil bugs or soybean bugs or natural gas bugs, just gold bugs. So it's an interesting dynamic that I see, and it's unfortunate. The other really important part about the transaction is the exit, which I think most of you don't take into consideration when you're going into a spot cash transaction. What you're doing is you're just looking for the cheapest price on the internet. And sometimes, or quite often, the cheapest is not the best to go with because it might be a rigged price, or you don't know what their buyback policy is. So again, like I said, the exit is one of the most critical parts of the entire transaction. For instance, I know of a couple bullion dealers out there that have really low rates, but their buyback policies is probably some of the worst in the industry. They buy back really at a reduced rate, so they widen that spread on you. So that's something that you have to take into consideration when you're buying or purchasing in the spot market. Another thing too, I've realized is a lot of you go into the transaction thinking you're going to hold on to this metal for a long period of time. That you're going to hold it on for the rest of your life, or you're going to give it down to your grandkids, or, you know, and so on. So in saying that, what I've learned is a lot of people end up having a life event. And that is where they're going through a divorce, or maybe a death, or maybe they had a fire. Who knows? But now they need to convert it, you know, before, you know, within maybe 4 to 5 years, they need to convert it back to US dollars. And then that's when they're realizing or quantifying that they've been really screwed. And I've run into that in substantial numbers just in the last few weeks, where people put in $250,000 or $500,000 and find out that their bullion dealer won't even buy it back, or maybe the other guy down the street is going to buy it back at 3% below spot. So then they're realizing how much that transaction cost and how much they actually lost in terms of their wealth. So again, the exit is one of the most important parts of the transactions that I think the general public doesn't think about when they're going into the transaction. And I'll say this last thing regarding the exit. You know, there's even another bullion dealer that I used to work at. They've got a preferred price. But the reality, and it's a fixed price. It's lower than their spot price. So you think you're getting a good deal. But the reality is it's a financing price. And again, it's all about the exit on that financing, that you realize what your charges are. And there's no truth in those charges, or they're not put in front of you at the beginning of the transaction. So again, it's all about the exit, in my opinion, when it comes to investing and trading precious metals. The other thing that I notice out there is the whole bait and switch tactics that are being used against you guys. Just recently, I went onto all the major bullion websites, and they have all these teaser rates first and foremost, okay, as low as, or, you know, you got to buy 100 of these to get that really low price. But as soon as you click in and you get to the cart, you know, next thing you know, you're paying, you know, $10, $15, $20 more per ounce, and they're, you know, a little deceitful in their ways. Another bait and switch tactic that is used is, you know, you come in for the shiny little gold coins as a collector, okay, and next thing you know, you're using investment dollars, and you're going for bigger sums because they strike up a relationship with you, and next thing you know, you're buying these coins with the huge spreads on them, or these bullion bars with massive spreads, and they're not upfront about those spreads when you go into them. So really, the bait and switch tactics that are used in the spot cash market are everywhere. So that is one of the reasons why I always recommend just buying non-graded, government stamped gold and silver coins. Don't do any of the specialty stuff. Stay away from all that stuff. Because when you go to exit those, if you have a collectible, you're always going to be haggling on the price with those. So in closing with today's long-winded video discussing the spot risks and the risks associated in the spot physical bullion market, hope you learned something. It's very multi-layered, lots of teaser rates, lots of lack of regulations, and really you just want to be on your toes, particularly if you're using, you know, retirement funds or maybe funds you can't risk in these markets. So again, I hope you learned something. Multi-layered, definitely go on the internet. You can definitely see what I'm talking about in terms of the deceitful price practices that they're doing. And again, because there's no guarantee on the buybacks, you really got to be careful and really be cautious. What they say today and what could happen when you go to exit 6 months from now usually isn't the case. So again, hope you learned something. Have a great trading day. Take care. Bye.